let's start tonight in the Kingdom of Saudi Arabia. That country's oil minister has effectively crushed hopes that OPEC members could actually agree to a cut on collective oil output at a meeting in Algeria on Wednesday. Oil prices are more than half from the pre-June 2014 levels, well over $100 a barrel back then, partly due to oversupply. That in turn has prompted OPEC producers and non-OPEC majors like Russia to seek a deal that would rebalance the market, bring supply and demand much closer to each other and hopefully boost revenues from oil and gas sales in the process. Iran, which torpedoed the last effort to get such a deal in April, will be attending the meeting this time round. Its Oil Minister Bijan Zanganeh says expectations should be modest, with several OPEC delegates saying that the positions of the Saudis and the Iranians just remain too far apart. Iran, for example, is insisting on the right to increase its output to anywhere between 4.1 to 4.2 million barrels of crude a day. OPEC Gulf members, however, want that output capped at just under 4 million barrels of crude a day.
And to have a consultative meeting, informal meeting in OPEC to exchange the views.
What does Iran want eventually? Do you want to get back to your previous market share to a level of almost 13%?
This is our expectation.
To get back to almost 13% of market share of OPEC?
Yes, this is our aim.
And what about Saudi? What do they think of this?
Can ask from the Minister of Saudi.
The time has come to reinforce our joint efforts to reduce uncertainties, enhance transparency, and deepen shared insight into future energy trends.
Now, let's get some more insights into what's going on in the oil market. Jade Barker is live in New York right now. Thank you for your time, Jade. What sort of deal is being proposed at this meeting, and how does it differ from the one that was on the table way back in April? Of course, that imploded at the last minute.
Well, what we know so far is that the proposal would cut almost 1 million barrels a day of the cartel's production, according to people involved in those discussions. Now, how this will work and which countries will have to bear the brunt of the cut is still unclear, but there's not a lot of optimism that any kind of cut in output will actually be agreed at this meeting. For a start, it wouldn't let Iran carry out its ambition to increase its production to over 4 million barrels a day, something that Tehran has repeatedly said it intends to do as it tries to ramp up its production after the Western sanctions that crippled its oil industry were lifted. Now, the Iranian oil minister said this week at this week's meeting in Algiers was only for consultations and is now not the time for decision making. So that doesn't really bode that well, does it? The biggest source of conflict is between Saudi Arabia and Iran, and the stage doesn't look set for these two to reach an agreement, with several OPEC delegates saying today that the position of the two countries remains too far apart. This friction between Saudi Arabia and Iran is also what caused that proposed deal in April to fall apart. Now, the details of that deal were also scant, but essentially Iran disagreed with a production ceiling and Saudi Arabia insisted Tehran had to be part of any agreement. However, this time there's more pressure to reach an agreement, and the Nigerian oil minister has told reporters that progress has been made since those talks broke down in April. Several sources have also told Reuters that Algeria and Qatar, as well as non-OPEC member Russia, are talking to Iran in a bid to rescue a deal. So what we could see coming out of this meeting this week are some breakthroughs, laying the groundwork for what could pave the way for an agreement when the producer group meets again in November.
Indeed. Let's talk about Saudi Arabia, however. It's a linchpin of pretty much everything that's going on right now. Is crushing US shale producers, squeezing them out of the market, still a very clearly defined policy objective for the House of Saud, or has that become a non-issue since 2015?
Well, industry analysts that we spoke to say that Saudi Arabia's goals regarding the shale market have been misinterpreted. They say that Saudi Arabia's goal wasn't to kill the shale industry, but to cut oversupply and therefore drop prices. And that's what's happened. And after Saudi Arabia refused to cut down on output, it forced a lot of companies to go bust. but many of those were smaller producers which might not have survived anyway. Though the collapse in prices caused a wave of bankruptcies, total US oil production has only fallen by around 535,000 barrels a day so far this year, compared with 2015 when it averaged 9.4 million barrels according to the latest federal data. So the US shale industry isn't looking too shabby. Also, Saudi Arabia may be looking to use some of these unconventional fracking technologies themselves. And now that things are cheaper, they might see a good investment opportunity. And they currently seem to be investing in American and Chinese refineries a lot. So while they didn't kill the shale industry, they did slow it down by flooding the market and created a market with more productive energy producers. And this, in turn, may have created an opportunity for the Saudis.
Indeed. We'll leave it there for the time being. Thank you for that. That's Jade Barker, of course, live in New York.